Good evening. This is the Elliott Wave update for the NASDAQ 100 for Wednesday, February 2nd, 2022. Well, to say that Facebook, aka Metaverse, launched and detonated a nuclear bomb under their headquarters would be an understatement. The company reported earnings this afternoon. And while the fourth quarter earnings were not bad, in fact, I think they actually exceeded expectations, the forward guidance looking out into the balance of this year took the stock down from the close at 323. It reached a low thus far, I believe, at 245, something like that. Close to almost, working its way down. In fact, I'll just take a quick look here. It got down to 244, and now it's trying to rebound. And how far it gets is anybody's guess. This is a serious sell-off in Facebook, and it is now taking everything else with it. Pretty much sort of like Google's blowing the doors off to the upside yesterday, brought everything up along with it. And just to let's just take a quick look at how the market in general, the NASDAQ index, is going to get hit based on Facebook's earnings. And right now, we see that Apple is down $1 from its close. AMD down $2.50 from the close. AMAT down $2.50 from the close. Amazon down 90 from their close. We have Facebook, of course, now trading 257. There was the close. Google 2905 after closing at 2960. That's on the swing back up. It just touched 2,900. And there were several times it traded above 3,000 today. These are very large moves. And we have, let's see, Microsoft down 2, but it might survive well. Netflix getting smacked yet again, down an additional 7 after closing down 27 today. NVIDIA being marked down 8 after closing up 6. PayPal, already on getting trashed today, is down an additional 3 after being down 43 on the close. Square getting it on the chin, down 5. Tesla, after being down 25.5 on the day, trims an additional $15 off the prices. So it just reverses everybody's thinking in terms of, okay, forward guidance, we're all going to do well, we're in an upswing, et cetera, et cetera. Now, how do I want to interpret this and everything that we just saw into what I just presented yesterday? That it appears that the NASDAQ had bottomed in intermediate wave 4. In fact, it ended in a failure. And then the market just took off and it rallied. And then it rallied right up and past 15,000. Let me take this up again to, let's go to the 4-hour chart so I can show you what it broke. That was that wave 1 if we had to go. It got 100 points above that. That was at 15,152. That was the line that would have negated this move being a minute fourth wave. So that got minuted. So making this change is well in line with Elliott guidelines and rules. Okay, so what actually is going on? Well, I did count 5 waves up. If we are in an intermediate 5th wave advance, and this is the first wave, then we're in a minor wave 2 correction. And we can already see, let me see, I'll open this up here a little bit. We can already see A, B, and we're coming down in a C. Or 1, 2, 3, 4, 5, wave A, a B, and a C. Yet to be determined. But now let's just take a quick review of what are the characteristics of second waves. The first wave being a launch off of a low or a drop off of a high, whether it's a major high or a major low, does kind of sort of make a difference. But right now we were off of a pretty much a very strong low after the market reached 16,768. We bottomed basically at 13,706. So that's 2,300 points that the market dropped in pretty much record time coming off. A couple of months and we're down that much. So the rally back up was intense, had all the bullish factors into it, rallied strong, et cetera, et cetera. So a wave two is often just like the market does a reversal. And so then everybody starts to interpret it's reversing again, not reversing up, now reversing back down again. And this is not uncommon. In fact, second waves can retrace almost all of wave one. Now we're in a minor, so it's a little bit larger degree because wave one is 13,825 to 15,261. Pretty big distance we got going there. So to bring it all the way back down would be pretty severe. Okay, so I put up some fibs. These are the retracements. Let's take a look. 236 has been trashed. 236 came in at 14,922. We've already reached 825. That's pretty interesting. 14,825. Now rallied back up, and now we're beginning to drop down again because they've now rallied Facebook back up off the floor, so they picked it up $13. For all I know, that's short covering on whoever sold it. You know, I don't think that there are these analysts that are really putting all their pencil to the paper to figure out all these numbers and put it down and say, oh yeah, this should be the price of the stock. Because that's a hope of women, a prayer, as far as I'm concerned, as the market has already given its stamp of disapproval about what it got reported on. And I would assume that the market will find its levels in Facebook of what will be fair value based on what information they have. That I don't believe has been discovered yet. And as we can see, just as I'm talking, it's already slipped back $2.50 off of that high, maybe $3. So it's moving at some pretty fast speeds here. Now, what can we expect here? Well, come on. If this is the whole ABC, well, then we have support at 14,713-ish. The 200 moving average is at 14,735. Now, same thing applies. See what happens when it broke the 50? Come on. I'm going to open this up even more if I can. I know we got a lot of lines here, folks, so let me see what I can get rid of. I can get rid of this one for right now. And this is all fits. It's just going to seem crunched out. This is the 50, that orange line right there. Came in at 14,961, broke, and it's dropped 100. So that acceleration, and this is aftermarket. This is not all participants. So the same guideline about breaking a moving average in either direction still applies. So we got that acceleration coming, breaking that. We got immediate acceleration because it closed basically, you can see, on the 20, broke that, boom, and then boom, right through the 50, and we're still heading lower. If it breaks 14,735, I would anticipate that the market is going to continue to drop. Now, here is the 382 level, a common level for a corrective wave under Elliott and Fibonacci. Now, being that this is likely going to continue, and maybe this is just wave 1 of A, wave 2 of A, wave 3 of A. So that could produce its own acceleration lower. So what are we looking at then? Let me pull this back open and let's look at the 30-minute chart and open that up so we can take a peek. What could this now tell us? It could really start to paint a very negative picture for the NASDAQ over the next day or so, as all of this dust settles, as everyone gets all of their numbers in line and makes the adjustments that they need to make. Now, believe it or not, the Dow is continuing to hold its higher levels. By the grace of God, Facebook, AKA Metaverse, is not in the Dow. So, but that doesn't mean that the Dow won't get dragged down if the balance of the market begins to get sold. If they start selling whatever was propping up that Dow today, we'll see. But we're not trading the Dow, I'm trading the NASDAQ, okay? So breaking there puts our support at 14,713. A break there drops it down to 14,543. That's the 50% retracement level. 618, 14,374. This would be quite amazing to see the market just return against everything it just did, which to me would be nothing more than all of these hedge funds and these portfolio managers and position traders again reversing positions from being short to being long, now back to being short. I'm not saying that's what's going to happen, but I think that it's the volatility for one has definitely increased. And believe it or not, we now have basically can say we got a trend now, and that trend is, however, on a 30-minute basis, down. The overall trend may still be up because we have not concluded that this intermediate fifth wave, and in turn the larger primary wave 5, the cycle wave 5, those have not been completed according to the count that I'm using right now. Now I am going to go out, I'm going to take this out and put it on a monthly, because what may have to happen, we got 1, 2, 3, 4, and it just might come in right there. So let me drop this down to the weekly, see if we can see some inside. If you remember, I was talking about that I had problems with this particular wave against this massive first wave. Now, under Elliott, the deal remains that out of waves 1, 3, and 5, wave 3 is often the longest and the strongest, but what it can't be is the shortest wave. So if I have to bring this down, the 3 down to here, the 4 over to here, and put the 5 there to declare this over, then we're in a much different situation. I'm not doing that yet, but I need to put it out there. So we got to stay on our toes, folks. And if you're a position trader and you're trying to position for what the expected move may be, I understand you're having a very difficult time right now. I get that. But there's nothing that really can be done until the market tells us. And what's going to help us is that now we've got to live through this wave 2 with the potential that it could literally come all the way back close as it can get to 13,825. It could certainly fall to 14,250 or 374 and still be in the realm of possibilities. and not change this view that we're in an intermediate fifth wave advance. So this is where the difficulty is going to lie. But I and many of you that listen to me, we are day traders. And I've already heard from some that they were holding out that they were going to keep the 4 here. That's been negated. But the position reversal may not have been a bad idea in terms of that they held a long position and wanted a few more points, etc. And hopefully they got it, they got out. Because now we're looking at a completely different situation. And this wave 2 could get deep and still lead to a kick butt third wave rally. And we could get that as soon as tomorrow. We have Amazon reporting tomorrow. Will that reverse everyone's minds yet again? Like we have Facebook now sinking back down again. And that's going to pull the NASDAQ down again. So, but if we got to go through that all night, maybe we do end up down here or down here. Then Amazon reports, maybe they will blow the doors off. We don't know. So with still a few companies out there, NVIDIA is yet to report, they're coming out in a couple of weeks. We have other companies that still need to tell us how their quarter and year have been and what they expect for 2022. So with all of that in mind, tomorrow, we need to be prepared for continuation of the downside. As traders, we need to be looking at the price action. This does not look complete. This in and of itself is very bearish. It's an hourly bearish bar. And in fact, not that it's engulfing a ton, but it's engulfing. Now, we got to go over to here. That's our price support. This price support has been tested. And so far, look at it's holding. Price support at 14,821. Our low thus far is 25. People are still going to look for that 21 to hold. A break there drops the price support down to 14,729. We already have 35 being the 200 moving average. Then we have the 29. Then we have 12 being Fibonacci 382. So we have a zone here. Maybe that'll contain things until maybe Asia or until Europe gets online, et cetera, et cetera. Now, any of these levels can complete the wave 2. But then coming off of that, the expectation would be that a third wave advance is kicking in. That should not wander higher. That should just start to find the buyers and they push and they begin to move it through resistance, through above moving averages, pretty much as we have seen. Now, in order to do that, Facebook has to go along. We can't have these conflicting, one being sold real heavy, the other being bought real heavy, and expect one side to balance the other out. They won't. They'll end up. Facebook's got a pretty sizable weighting in the NASDAQ 100. So does Google. In fact, Google, because it has an A and a B shares, or the B and the C, whatever they're termed. So you have GOOGL and GOOG. Combine them, they got a 12% weighting on the NASDAQ. Facebook, I believe, has 6, maybe 7. Apple has the largest, over 12. Amazon's up there as well. So we're talking stocks that carry a pretty heavy weighting in the NASDAQ 100. So PayPal is way down there in terms of how strong of an influence will being down as heavy as it was today be on the NASDAQ. Actually, the NASDAQ finished the day, well, 140 points higher than where it is right now. So this is where we are. For tomorrow, stay on your toes. we're going to be playing price action. We're going to be using these moving averages. We're going to be using the Fibonacci coming off. These are important levels. They are the retracement levels for what we are now looking for to come back down before we pick up and go to a third wave. We also, at that same time, I am going to be following this market pretty closely for signs that, as I mentioned, that this larger count is in jeopardy. Again, I'm not sure what I would call this other than ABC, A, intermediate A. This is intermediate B, because this is 3, not 5. Now, the S&P did 5. The NASDAQ could be doing 3. It's still possible that this would be intermediate A, after this being the completion point for the minor 5, the intermediate 5, the primary 5, the cycle 5, the super cycle wave 3. So those are still a possibility. I'm not moving that over to preferred status just yet. And that's based on my knowledge and my guidance that I get from Elliott for what I can expect from a wave 2. That doesn't mean that I'm going to be loading up on the long side, folks. I will trade what's in front of me. I suggest that you do the same. The volatility, I'm now pretty sure, is going to be pretty solid again tomorrow. So, and that's going to be on both sides of the market. As buyers move in, it'll make these quick, sudden moves. So be prepared. And again, I'm looking for additional downside. I think rallies are going to be limited. And unless we see Facebook just recover and fly. That would be a clue that maybe our upside is going to hold. So again, got the 50, that's the hourly 50, has been broken. The next up would be the hourly 200 at 735. We've got additional price support at 29. So it's 35, 29, and then 13 for the next Fibonacci. If all of that gets broken, it's going to accelerate the selling. Then we're basically going to be heading, because if you check, go left, we got nothing. This was all a rally. We don't have price points to go like, oh, there's some support. So the next support is actually 14,400 again, and then down to 14,374. Could it do it tomorrow? Sure. Sure. It definitely can. So I'm going to leave this all right here. I know it's a lot to digest. Stay on your toes, trade smart. Don't get married to either side. Stay open. Next update will be on Thursday, February the 3rd.